Welcome back, everyone. I'm Rick Harrison. Welcome to the Real Authority Show. We have another episode coming up with Kara DeMarzo, who is of the Chapman Insurance Group right here in Southwest Florida. She's going to be answering all of your important questions and the frequently asked questions I get as an agent when it comes to home and flood insurance down here in our Florida market. So that's coming up right now.
Welcome to the Real Authorities Show, a results-driven podcast that shows you how to achieve your goals, no matter how big or small, through the experiences, lessons, and advice of some of the leading experts from nearly every industry. So, follow along as we explore their blueprints for success and the real answers to your tough questions. And guiding you on this journey, here's your host, Rick Harrison.
Welcome to the show, Kara. I appreciate you for being here, and I'm really excited to get some of these questions answered because I know as an agent, I get asked them all the time, and I know you've been getting a lot of them asked by me just because it seems like there's been a lot of changes in the insurance market recently, and it's been a little bit confusing to be an agent and kind of advise my clients, I don't know where home or flood is going to fall anymore. So thank you for coming on the show, and how are you doing today?
Good. Thank you for having us. As you mentioned, my name is Kara. I work for the Chapman Insurance Group. I have been with them since it will be 7 years in March, actually. So everything that I have learned insurance-wise, I have learned through Chapman Insurance Group. So happy to be on the show.
Yeah, no, you guys are my go-to for sure. You've always given my clients the most competitive rates, and I'm really happy that all of the clients you've been able to service. And I think the biggest thing for today is just talking about a lot of the changes that have been happening in the last few months, really since October, and kind of giving the audience some direction. I know there's a ton of people moving to Florida and they're unfamiliar with a lot of the rules with it when it comes to flood insurance and things like that. So just to kind of start us off, what kinds of, when it comes to purchasing home and flood insurance, what kind of issues do we typically find, or down here typically find, that are usually raising premiums or causing a bulk of the trouble of getting insurance in the first place?
So I would say in the past year, the insurance industry has significantly changed. Obviously, everybody can see across the board that rates have increased tremendously. Underwriting guidelines have really cracked down across the board as well. We personally write with over 30 home carriers, over a dozen auto carriers. We have found, working with a independent agent who has multiple companies that they represent, has helped in this process because there's more opportunities for hard to place risks. So one of the biggest changes that we've seen as far as underwriting guidelines is the roof age. A lot of companies have changed the shingle roof estimated life remaining from 25 years to now 10 or 8 years. Yes, that's a huge change. It makes it very difficult when a client is replacing their roof, the roofer goes out and warranties the roof for 25 years. But in regards to the insurance, the lifespan is really only 8 to 10 years.
Okay. Now, does that change between something like a 3-tab and an architectural roof?
Yes. So you're going to have a larger lifespan for the architectural shingle. You're looking at 15 to 20 with very minimal companies. I think we have 3 to 4 that will insure that. Typically, the lifespan for the shingles across the board now is 8 to 10. The tile has a lifespan of 25 years, which used to be 35. And then metal, which was 35 to 40, is now only about 30 years.
Okay. Yeah, those are some really big changes.
Mm-hmm.
That's definitely something homeowners are going to need to know too, and that's something I didn't even realize, that they had reduced the time down to 8 to 10 years. So that's good to know as well. What about, so I know there's some other issues that I've seen come up with some of my past clients' homes, like polybutylene piping, different things with that. Are there insurance agencies that still insure homes with polybutylene piping, and then what's kind of the situation with that?
So, one of the biggest things I think that they've changed is most carriers required a 4-point inspection anywhere between 30 to 40 years of the home. They are now requiring that strictly at 30 years, and they require that upfront prior to binding. So, whereas in the past we've had a little bit of wiggle room, if a client wanted to purchase the home, they made a deal that they would fix the plumbing or the roof within the first 30 to 45 days. That was easy to write last year, way back when.
Yeah.
Now, unfortunately, they don't allow those things. Very rare cases, if the risk is, otherwise clean, so to speak, they will allow time to have those items replaced. But yes, the poly plumbing, the Federal Pacific electric panel, the aluminum wiring, all of those items, they are now requiring to be repaired prior to binding coverage, and they're requesting the 4-point inspection be uploaded prior to binding.
Okay. And then I know obviously the other big thing down here is flood insurance. And I mean, honestly, I've been surprised at some of the quotes we've gotten back from different insurance companies when we did it. But there seems to be a bit of a difference between some of the FEMA-based insurance companies and the private companies. I mean, can you tell me where that difference is coming from? I mean, we've gotten quotes for, I think the lowest was 2,400, which was from you guys at one point, and then we got a private insurance company who came in at almost $9,000 just for the flood insurance.
Mhm.
So, what is contributing to those huge differences?
So the National Flood Insurance Program is obviously nationwide. Um, they have been around for years. As you can imagine, that being the main source of flood insurance with Katrina and all of the devastation that the United States has endured has really racked up the debt that we owe to them. Um, Effective 10/1 of 2021, they rolled out the new risk rating 2.0. This came as actually a surprise to all of us. It really wasn't anything that was advertised or mentioned by the National Flood Insurance Program. We logged in 10/1 to do our normal workday, quote some flood, and noticed that the rates increased over 150%. So, yes, that was crazy. So that's when our agency owner, Brian Chapman, reached out to a state level and found out what was going on with everything dealing with flood. So basically, because we have over $3 billion in debt to pay back to Treasury for those past floods, the National Flood Insurance Program has since revised how they rate properties. They have resorted back to not using the elevation certificate. So, whereas if your home sat 2 feet above the base flood elevation of your area, you would have had a less expensive flood policy. Now, everybody is kind of sharing in on the cost. Fun fact, too, is Florida pays the most into the National Flood Insurance Program as far as premiums, but we have had the least amount of claims.
Huh.
So everybody is really sharing the weight there. You mentioned the private flood market. The private flood market has actually really been a big savior to us. They allow for more competitive premiums. They don't have the past debt that we have to pay back to them. So financially, they're a little bit more stable and they're able to offer more competitive premiums. Another avenue that we've kind of been digging into is some of the home carriers, such as Florida Peninsula or Tower Hill. They have a private flood endorsement that you can tack onto the home policy. I have seen new flood risk ratings at $9,000 being offered for $2,000 if you attach it onto the homeowner's policy. So that's something to really think about. Another option is just checking with your lender. Some lenders don't always allow for the private flood market if it's an FHA loan. So if there's approval from that, we can offer the private flood market. Otherwise, the National Flood Insurance Program is unfortunately the only option, and they have taken just a significant hit.
Okay. Yeah, I know. Just running some of the numbers on investment properties for not only myself but clients as well. sometimes those rates can really take a big chunk of that, profit margin out.
Yeah, I wanted to add, we've also played around a lot with quoting with the new risk rating 2.0. And we've noticed that doing small changes like eliminating contents coverage on the flood, because it's not actually insured at replacement cost, it's at actual cash value anyways, removing those contents can bring the premium down almost half as well.
Okay. Um, when it comes to, I guess some smaller types of questions or more frequently asked questions that I get, um, little things like with flood insurance, if somebody's buying a condo, let's say it's on the second floor, is that condo gonna, or is that buyer going to be mandated to have flood insurance coverage? Can they opt out of it, or is there something in between?
That is definitely up to the lender. If they are in a high risk flood zone, the lender will require the flood insurance typically. The condos have like a master flood policy in place, but that only brings the unit back up to builder's grade. So the lender may require the building from the inside, the walls in for the flood as well as contents. Um, but they can also elect to not purchase the contents or just purchase contents only if they don't have a lender.
Okay, so it's going to come down more to the lender, even if it's on a higher floor than the first floor.
Correct. If it's in a flood zone, it doesn't matter what floor it's on. It's contingent upon the loan.
Okay. And then another question that I get pretty frequently is the difference between insurance policies, whether it's home or flood, between a primary buyer and somebody who's buying as an investment or a secondary vacation home. What is there a pretty sizable difference in the premiums? And if so, what are those differences being weighed upon?
So, as you can imagine, renting a home opens a can of worms to liability issues. The insurance companies have taken that into account. Typically, if a home is rented out, the premium may be a little bit higher because of the liability exposure there. The biggest thing to take into account is whether it's an annual rental or a short-term rental. We don't have, there are only a small amount of companies that will write the short-term, weekly, or Airbnb rentals, whereas a majority of them will write the annual rental. Take into account as well, you have, for example, a 1976 home. It has a 2005 shingle roof and it's rented weekly. That really starts narrowing down the options that we have available because of the roof age, the updates or the lack thereof, the rental exposure. So the companies that we're working with that are allowing the older roof age may not necessarily allow for the rental exposure. So that really knocks out the options that we have.
Okay. Now, are there other factors that play into besides the roof age as far as age of the home? Is it basically going to come down to the 4-point inspection and what you get back on that? Okay.
Yes.
Um,
Most companies too are requiring that updates have been made on the plumbing, electric, the 4 points of the home, the plumbing, electric, HVAC, and roof within the last 40 years as well. So they want permitted repairs and updates within the last 40 years.
okay. Now, the other thing when it comes to, let's say, an investor's property type, what is the difference between somebody buying, let's say, a duplex versus a quadplex that might be two separate buildings? Is there going to be a difference in a premium where that quadplex that was two separate buildings versus the a quadplex under one roof? Is there going to be a difference in the premium in that, and what would be the expectations for that?
I would assume that the premium would be slightly higher. That is more of an eligibility thing,
Okay.
I would say. So it depends on how many parcels it's sitting on. You're saying is if it's under one roof, then yes, that would be considered one structure. If you have two duplexes, two different parcels, then obviously that would be two separate buildings. But yes, you would probably see a higher premium for that.
Okay. Um, as far as the flood insurance goes, because I know this was an issue um, I've had with a couple clients earlier in the beginning of the pandemic. Finding, because we were all scrambling, everybody was buying so much, and finding appraisers, finding contractors and people to go out to see the properties. It was on a tight timeline to begin with because of the demand for buying property, but elevation certificates. Do you guys work with specific companies? Is that something that you require the buyer to get done on their own? Do you have people that you can recommend?
Yeah, so typically when the insurance quote request comes to me or lands on my desk, the title agent's already involved and a lender's already involved if they're using a lender. So the title typically works with the buyer to get a elevation certificate, although they aren't really as needed anymore. So I would suggest before, as far as the timeline goes, I would suggest I like to make myself readily available to my agents. If you are showing 3 houses this afternoon and you have a buyer that you're having a hard time finding a place for, shoot me those 3 addresses. Let's run a preliminary proposal, kind of get a rough estimate on where those are going to sit to present to your buyer when showing the home. Otherwise, as you can imagine, they walk in, they fall in love with the house, and then they find out there's a $15,000 flood premium and it's out the window. So I do like to make myself available for that. Yes, that brings on a lot more work, but I have realized that that has built relationships and has saved deals time and time again.
Yeah, that's something I always recommend, and I'm surprised at how many agents don't actually try to get the insurance quotes ahead of time before they even do the showings or even put in an offer, especially nowadays. But yeah, that's one thing I really appreciate about you, and that's probably a huge reason why I continue wanting to work with you all the time, is because you're so helpful and you're on
Thank
the
you.
ball all the time every time
Thanks.
I request something. So appreciate that.
Thank you.
Um, with as far as homeowners or future buyers go, obviously they don't have to just rely on their real estate agent to get quotes for them. What is the best way to go about finding a good insurance company? And what should they be looking for in an agency or an agent specifically to get the best premiums?
Definitely, I would suggest looking for an independent agent. Working with a captive agent narrows down the options that they have to insure the property, such as like an Allstate or a State Farm. An independent agent has a variety of companies with a variety of different guidelines that they allow for. Um, Also, choose a company that isn't just premium minded. One thing that I can say about our agency is we are a little bit more conservative when it comes to that. Yes, we want to offer you the best price possible. We want to save you money where we can. However, we don't want to find ourselves in a position where we have underinsured your home or we've left out a very important coverage such as screen enclosure or water backup, and then find ourselves in a sticky spot once a claim arises and you aren't covered. Um, we pride ourselves on educating the community. We are a huge, part of the Realtors Association as well. We love any opportunity that we can to educate on the changes in the insurance industry and offer exceptional customer service.
Yeah, no, yeah, you guys have been awesome. So
Yeah.
okay. Now with I guess just to kind of wrap up a little bit, do you have any, I guess, money saving tips to offer potential home buyers or future home buyers? I know, the third nailer is always something that saves homeowners that a lot of homeowners don't even know about. Um, could you maybe explain that and maybe a few other tips that might help them save money on their purchase?
Sure. Yep. The wind mitigation inspection, which is what you were referencing with the third nail, does offer significant savings. So basically, that the wind mitigation inspection offers discounts based off of the nail spacing, the spacing between each nail attaching the roof to the structure, as well as the material that they use, whether there's a secondary water resistance barrier, the opening protection credit. One thing to keep in mind too is I get a lot of clients that call and say, we just outfitted our entire home with shutters and opening protection, and they spend $4,000 to do that and replace the windows, only to find out that most companies nowadays only offer that discount if every opening is impact resistant. So that includes any decorative glass on the garage door or the front door. If those items are not also impact resistant, they will not offer the discount at all. I would say my best advice is have an agent that is educated in these things, knows the workaround, so to speak, knows the different avenues to look into to try to save the client money, such as endorsing the flood onto the pre-existing home policy. That's going to save tons. The wind mitigation, getting that. What other options do we have as far as saving money? You can also lower your contents coverage. A lot of agencies insure contents at 50% of the dwelling. A lot of clients feel like that's a little bit over the top. So lowering that, removing replacement costs on contents as well. So we like to discuss those options with the client, see where they need to save money, how much they need to save, and then we'll work the policy up to cater to them and their needs.
Okay. Yeah, that makes sense. Those are some awesome tips. I'm sure a lot of people didn't even know about half of those.
Mm-hmm.
Well, I guess just any final thoughts as far as information. Obviously, I want to make sure that our audience can get in contact with you since you've been obviously so great for my clients, and I hope that my audience will start to reach out to you as well. How can they best reach you?
I have a cell phone number that I will provide to you that you can put out with my business card and an email. I am reachable 24/7. You can reach me on my cell phone if you need a quick quote to either show a buyer or a seller, or just for personal reasons. Go ahead and reach out to me and I'd be happy to work with you.
All right, perfect. I'll put that phone number and your contact information in the description below for those of you watching on YouTube. For those of you listening in the podcast, that will also be in the description as well. Kara, thank you very much for coming on today and sharing all this information and these helpful tips. Hopefully we'll do it again sometime. Maybe we'll get into a little bit more about the differences between the types of plans.
Yes. Thank you for having us.
Yeah, absolutely. All right. Thank you all for joining me again for another episode of the Real Authority Show. I have a few more episodes coming up over the next couple of weeks. We have some real estate investors coming on who are going to be sharing some differences between commercial real estate investing versus residential, and some more tips on other types of investments in the real estate sector that you might not have heard of before. So that's coming up, and I hope we'll see you all next week. Thanks for joining us today.